Hi, today is Sunday, May 6th, 2018. Taking a look at the S&P 500 as we head into the start of May week 2. Here is the 5-minute chart, the 5-minute view of the S&P 500, my intraday chart. And on my intraday chart, I manually plot each day where the simple moving averages are at because I can't use simple moving average lines on a 5-minute chart that are I'm supposed to be watching on a daily chart. So I manually set those and adjust them each day so that I know when price meets them. The 50-day simple moving average has been rather flat-ish, falling. I think it kind of like worked in range from about 2684 to 2680 by the end of the week. And you can see how even since the week before, all the way up at the high that we made for April, that all of last week, price has really consolidated and around the 50-day simple moving average. This sort of gives you a good perspective on how key that moving average is. And this first fail off of off of the April high, we kind of bounced along it, and then we lost it. We tried to regain it, and then fell again. We're also sitting inside of this larger rising channel that I've talked about that comes off of the April low, the rising channel off of 2553. And last week we started making some warning shots, some warning breaks of it on Wednesday until finally on Thursday we failed miserably, fell out of the channel, kissed back to it at the high of the day, and then recoiled off of it again. But then coming in on Friday, we took one more dip down to look at the 200-day simple moving average before regaining and moving right back into this rising channel once again. Our first here was Friday's trade right here. Here was the open and the move down to the 200-day, and then finally moving up, taking out the 10-day and the 20-day, and then by the end of the day we were up above the 20-day. We took a little bit of selling right into the close that took us down for a dip below the 20-day briefly, but then regained it on the close to close strong on the final candle of the day. And not too bad, not too far off of the high. We were looking for a strong close. A close up on the very high day, of course, would have been even stronger, but at this point in time, you worry about getting those. Sometimes that's an underhanded compliment because sometimes closing up at the very high of the day on a Friday is just people short covering ahead of the weekend. So, maybe it's a good sign that we had sort of we had a very sort of equal candle. That this dip down off of our open was equal to this dip down off of our high, and our close is about the equal distance from our high that our open was from our low. So good symmetry on the day, not too bad of an overhead tail. Close above the 20-day, as I said before, and now you can see it clearly on the daily view. And what we were targeting, if we had it even higher on Friday, would have been a takeout of this 50-day. We didn't get that, but that was where the 2682 target that I was talking about on Friday came from. That would have been a measured move of a double of the takeout of the 10-day simple moving average. That would have taken us all the way up here to about 2682, and it would have taken out the 50-day simple moving average as well. We didn't get that, but that's okay. I still think that's a pretty good strong move for the day. So what really needs to happen now is that we've got to take out this 50-day simple moving average, and we've got to advance past this little band of resistance that represents the 2017 close and the 2018 open. The 2017 close was 2673. The 2018 open was 2683. So we've got to get through this band on a closing basis. That would also be taking out the 50-day simple moving average on a closing basis. And then, starts the 80 handle rule. If you're too busy to remember where all these other stupid closes and stuff are that are over here to the left, just think about it this way. If we can get above the 50-day simple moving average on a closing basis, the 50 days at that 2680 handle, and so are the and so is the open for 2018. So if we can just get through 2680 to 2685, then we're going to be targeting 2700. And what's at 2700 but the 100-day simple moving average? And you can look over here left. When we took out the 50-day last month, it was a gap up open, and then that same day we took out the 100-day, and you can look and see how the 100 days split the daily candle in half. Then the next day was our April high. We bounced off of the 100-day as a low, and at that point in time I was looking at all the SMAs. I talked about this in the blog this weekend and why this was such a diabolical sell-off. You had the 100-day rising, you had the 50-day rising, you had the 10-day rising, and you had the 20-day that was flattening. You know, it was rising because it was higher one day than it was the next, but it was still kind of flat. So one more day up, and this would have ticked up and made a shape like what you're seeing here, this sort of little V-shaped move on the 20-day simple moving average, and that would have really sent the algos wild into a buy program. And maybe people were just like, nah, or there was some, you know, heavy seller in the market who didn't want this going any higher than 27, 25 or so. Maybe it was far more lucrative to sell calls up there than it was to buy them. So, you know, down we went, and that was so diabolical because everything was pointing to that move coming up. But as you can see, that wasn't meant to be. We came down here and fell through the 200-day simple moving average once again. But with Friday's hold of it, Buffett's comments, relating that back to the Jamie Dimon bottom of 2016. Excuse me if I've already mentioned this in this video, because this is like my third version of this video, but really reminds me a lot what happened Friday to what went on in 2016 at the February low, 1810. Everybody was completely convinced that we were going to trade down below the 1800 handle. We were all set and ready to do that, and then all of a sudden we started getting this short covering rally that started happening, and it was a combination of some OPEC supply cut, production cut rumors, and then rumors started circulating that Jamie Dimon had put out a press release that he was out in the market buying the stock, and that he saw this as a great buying opportunity for the U.S. stock market, and that we should all get over ourselves and just get long the S&P. And so everybody did. And from 1810 on to the Brexit sell-off in June, we pretty much had a very nice lift on the market for that time. So we can sort of relate what happened on Friday with Warren Buffett back to that event, if you really think about it. So anyway, that's it. Hopefully this follows through on Monday. We're going to find out in about an hour and a half when the futures open, and we'll see. You know, worst case scenario, I think, would be that we just have an inside day that floats between this upper section of the daily candle holding the 10 and 20-day simple moving averages. But our most bullish scenario is that this 10-day simple moving average is going to click upwards on the open on Monday. And if it can pass up through the 20-day by Tuesday or so, is what I'm thinking there. I mean, if it happens tomorrow, I think at the most it would be sort of like a meeting of the two SMA lines on Monday. And by Tuesday, it would pull up through. Then I think, you know, as long as programs out there treat that as the buy signal it is, then we should get a pretty good run going this week, with our goal in mind of hitting the 100-day simple moving average and taking out the downtrend from the all-time high, which is sinking, and the bar is getting lower and lower and lower to take out. And you know, by the middle of next week, it'll be about equal with the, or by the end of next week, it'll be about equal with taking out the 100-day simple moving average. So I have a feeling, though, that once we cross above this 50-day simple moving average, things are going to get a lot more bullish, and we're going to easily take out this April high. So anyways, that's it. I hope that this video was helpful, not confusing, and hopefully I didn't repeat myself on the Buffett story, because like I said, I shot this video 3 times. Third time's the charm. Have a great rest of your Sunday. Good luck and good trading.